The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, Thursday morning. We got some private payroll numbers this morning coming out at 99,000, a precursor to the main event tomorrow morning, 8:30 a.m., non-farm payrolls. We'll see where we go. But let's jump over to the headline before we see the markets, because fewest number of jobs since 2021. Private payrolls, 99,000 August after 111,000 July gain. You look at where those jobs were added. Education and health services, 29,000. Construction, 27,000. Financial activities, 18,000 on the negative side. Information, manufacturing, and then professional and business services with a decline of 16,000. So nonetheless, we get 99,000. If this number comes in for the non-farm payroll tomorrow, and sometimes these numbers vary dramatically, okay? So do not bank on the fact. Yes, you can try and read into it. That's what we do as traders. You try to read into everything and make your own market bias, your own opinion. But sometimes they vary wildly in terms of the number we get today, the number we get tomorrow. But if this number translates to the number that we're going to get tomorrow for non-farm payrolls, you are going to see unemployment rise. You're going to see a labor market that is pretty loose right now in terms of not the hiring that you may imagine that we've been used to, and that may be indicative of what? Decreasing rates as the Fed may need to cut. And we get a pop yet again. Pretty remarkable, right? A pop on Tuesday, a pop on Wednesday, and we follow that up with, again, we get a pop again this morning, and we get the 10-year now sitting at 3.72%. 3.72%, just like that. We're going to get a 3.6 handle. Look at this daily, right? From where we were in April at a 107 handle, we're climbing to a 115 handle. And what is remarkable is, look at where we are. We're right back to where this thing spiked on August 5th. Remember where the market was then? Keep your eye on that one. The market was trading at 51.29. We're at 55.25. 400 points the S&P was down at that level when we got that initial spike, where we saw the rollover trade occurring on August 5th with the yen, the dollar, the markets tumbling to lower prices. And then we got some of it back, right? You had the 10-year recoil all the way to a price point of 112.15, and boom, just like that, you are 2.5 points higher. The 10-year yield is now sitting at 3.72%. And of course, what's that going to do? You have decreasing yields. That's going to add a little bit of weakness to the dollar. You have the dollar trading a little bit lower today at 101.14 from a high of almost 102 a couple of days ago. As we are at 101.14 as we speak, you got a weaker dollar. That's going to help gold. You got gold up by $20 at 25.44 this morning. You got markets, though, just slightly in the red. S&P's off by 2. NASDAQ 100 off by 52, we'll call it. Dow up by 20. Russell up by 20 this morning. Bitcoin trading a little bit lower right now. We're just chopping around that 50% retracement from the run we had earlier in the year. That run from about 40 grand to 74 grand. Been chopping around at about 56,000 so far this morning. Crude sitting just under $70. Crude 69.94 right now. You know, anytime you get a dramatically weaker dollar, crude priced in dollars going to help it a bit, but still sitting under $70 at 69.90 right now in crude. We talked about gold up by $20 this morning. You take a look at silver up by 57 pennies at 29.13, and we talked about notes and bonds. Higher price, lower yield. The 10-year up by 10 ticks. The 30-year up by 14 ticks right now. And you take a look at that yield curve we talked about yesterday. The yield curve disinverting for the first time in a while. And where are we today? Well, where are we? We are disinverted, folks. Check it out. As you have the 2-year sitting 1 basis point below. So we now have the 2-year with a lower yield than the 10-year. For the longest time, the 2-year was above the 10-year, right? And that was not a good sign, as then when that usually happens, that's indicative of a recession. We haven't gotten it yet. Now we get to find out whether it's actually coming, as we are less than 2 weeks away from the next Fed meeting. That's 2 weeks from yesterday, Wednesday, September 18th. We got the private payrolls number. That comes in at 99,000. And now we await the non-farm payroll number, when we'll be waiting for Friday. A separate report Thursday from Challenger Gray and Christmas showed hiring plans in U.S. companies this year in August, fell 41% from the same 8-month period last year. Yeah. Announced job cuts were down 3.7%. ADP, 25 million is what it's a pretty large sample size, right? Private sector employees, but ADP based its findings on payroll data covering more than 25 million U.S. private sector employees. So it is a big one for sure. Now, when you're talking about non-farm payrolls tomorrow, okay, they're looking for a moderate pickup in the pace of job growth. The market is looking for 165,000 for the jobs added in August, okay? Would follow one of the weakest months of hiring since the pandemic. And as they put it, if ADP numbers accurately foreshadows the payroll increase we see tomorrow, and that is not always the case. They even put it in here. Then what's going to happen? Unemployment's going to rise. Yeah, and they're going to show a looser labor market. That is not what the Fed wants to see. Well, it's kind of double-edged. They want to see that as long as it's not too weak, right? They just want to see a little weakness to make sure the inflation is going away. They don't want to see too weak. Remember the Goldilocks scenario? We were getting some Goldilocks reports many times. They're looking for the Goldilocks. They don't want it too hot. They don't want it too cold. They just want it just right. But nonetheless, we get 99,000 jobs in August, and the market takes it, and basically yields react, but stocks, not really. Right, we're chopping around a bit. There's your 830 volatility. But yeah, all things considered, no really volatility in the equities, which is interesting. But boy, we have a move in yields, and that is for sure. How many rate cuts are we going to be pricing in by the time we actually get to that meeting, right? The market's already pricing in many rate cuts. Where are we going to get to by the time we get to that meeting? We got almost 2 weeks. Now, for the September meeting, the market right now, about a 55-45 chance that we're going one cut versus two, as in 25 basis points versus 50. It's almost a 50-50 call, which is remarkable when you look at where we are. What is more interesting is when you fast forward to the December meeting. What are we pricing in? This market is on fire, man. In terms of the rate right now is 5.25 to 5.5. By December, the market is giving it a 37% chance that we get a full 100 basis points, 1%. That would be 425 basis point cuts. Or we get 1.25, which would be 525 basis point cuts. This market is pricing itself for bad numbers coming down the line over the next month or two, accelerating the Fed's cutting cycle. Okay, now that's where as a trader you can make a decision. Is that going to happen? Well, if it's going to happen, that's kind of what the market's pricing in. The market's pricing in, hey, we get the 10-year at 3.7%. I know the overnight lending rate right now is 5.25 to 5.5%, but the 2-year is at 3.7%. What does that say about rates? Well, you better believe if the overnight lending rate is 5.25% right now, and the 2-year is at 3.7%, the market is pricing in dramatic cuts over the next 2 years. That's probably pricing in some weakness, and we're going to get to find out. We got a lot to talk about, folks. We'll go over some equities. We got S&Ps down by 1 right now. Stay tuned. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps down by 1 point right now. Dow barely in the positive. We got the Russell positive by 3. We jump around. Some of those magnificent 7. We see how we're going to open up. You got Apple shares slightly in the positive by a few pennies. We're trading at 221 right now. You got Microsoft shares slightly in the red at 407. Amazon this morning, they're going to catch a bid up by a couple dollars to 175.54 for Amazon shares. Not sure why they're getting a little bit of a bid, up more than 1% right now in the pre-market for Amazon shares. You jump over to Meta, slightly in the red at 511 right now. NVIDIA shares slightly in the red at 105.70. We jump over to Tesla shares, catching a bid to 225 from 219 from Tesla. Yeah, self-driving news is exciting investors. I would be careful, folks. Self-driving rollout in China and Europe next year. Planning full self-driving rollout in Europe and China next year. What happened to the U.S.? Why not the U.S.? What's going on there? Yeah, I'd be careful. People are going to need to trust those cars, and Musk is not very trustworthy right now. It's one thing, over-promising, under-delivering. He's been talking about self-driving for 4 to 6 years, folks, and the technology has a long way to come. There's going to be great strides that are made. They're already made. But when you talk about full self-driving, the first time somebody's in a vehicle, and anyway, it speaks for itself, right? Nonetheless, Tesla's positive today. We get the S&Ps down by 1 right now. And what else do we got going on? Well, you know what we got going on, folks? That's not the one I wanted. We got the NFL. Yeah, it is Thursday. It is the kickoff of NFL season. How about that? And we get tonight, the kickoff is Baltimore at the Super Bowl champion Kansas City Chiefs. And the kickoff, 8:20 at night. Man, I'm going to be asleep within the first half. I guess they got to service the West Coast, right, where it's only 5:20, but it is tough when you talk about that game's going to end easy 11:30, easy. You got Baltimore at Kansas City to kick off the NFL season. And you got Kansas City. They are a 3-point favorite at home to kick that off. Then you get Friday night. We got another game. Green Bay. Here, I'll just pull it over on ESPN because this is intriguing. Now, I saw a report recently that the NFL, it's probably rightfully so, they're going to back things up and they're going to roll out on Labor Day weekend. And they're going to have games Thursday, Friday, Saturday, Sunday, and Monday of Labor Day weekend. Makes sense, right? They're expanding the schedule. They're doing all this stuff. It was interesting. I had a bunch of friends that go to Boston College, and maybe you heard about it. They had themselves quite a game Monday night. Florida State, they're having a tough season after going undefeated in the regular season last year. They go into the bowl game. They lose to Georgia by like 60 points, and then they kick off the season and lose 2 times this season. They are 0-2 this year. We're technically only 1 week into the college football season, and they are 0-2 with 2 losses, and they have lost twice as 10-point-plus favorites as the number 1 team. But the point being, BC had quite a game, and it was Monday night of Labor Day. Everybody was watching it. A bunch of friends who went to Boston College, they're all jazzed up, rightfully so. But yeah, we got the season, and then you got the Patriots kick it off against the Bengals at 1 o'clock on Saturday. And yeah, we'll see where we go from there. But there's the lineup, man. And then you got Monday night, the Jets. Yeah, the Jets with their quarterback going against the 49ers. So the NFL is here, and it is interesting, of course, how much money these teams are getting. The average value of the NFL's 32 franchises, $6.5 billion. 6.5. That is quite a number, man. Look at this. The Houston Texans, number 11. Yeah. Look at this thing, man. Back in 1999, $600 million is what the Texans were worth, and now they're worth $6.35 billion. 10 times that fee and 3 times greater than the S&P 500 over that time, right? And the team during that time, 152 and 202 over 22 seasons and never made the Super Bowl. So you buy a team for $600 million in the year 2000. You have a losing record over that time. You never make the Super Bowl. But guess what? You're an owner of one of the 32 teams in the NFL. And what they sell those rights for, we all know. And yes, you have multiplied your investment times 10 to $6.35 billion. And it's probably not going to stop from there, man. And they just talk about some of the compounded growth. You don't have to be a genius to figure out they are rising, and they are rising fast. Yeah, the current television agreements, Comcast, Disney, Paramount, and Fox, $9.2 billion a year. 85% more than the previous deals. Pretty remarkable. Yeah, you add in the streaming deals with YouTube, Sunday Ticket, Amazon Prime for Thursday, and the NFL is guaranteed an average of $12.4 billion a year. Now, what's remarkable here is, right, the NFL knew they didn't want to kick off the season on Prime. So what they do is the Thursday night game that I was just talking about that kicks things off, that's on NBC or Peacock tonight. But then it goes to Amazon. The Thursday night games, I believe that's the case. So coming up after that, you're going to get on Amazon. Prime is where you'll have to watch those Thursday night games. But the first game of the season, they try and make it available to the masses on regular TV, on NBC, and on Peacock. Yeah, nonetheless. Football's back. You got to love it. All right, what else we got? We talked about Verizon yesterday. Yeah, so they're buying Frontier Communications. $20 billion deal to boost that fiber network. We talked about this briefly yesterday. You jump over to Verizon. They trade lower yesterday from $43.27 to $41.19. You're challenging those lows yet again this morning at $41.19. Excuse me. FYBR. Now, Frontier came out of... Oh, look at that spike. I wonder what happened there. What was going on there? Are they going for more bids or something? What was the 6 o'clock? Oh, that is when the deal actually got announced. Okay, so the deal gets announced that it's getting done. The speculation was here. Not sure why you spiked all the way up to $43 when the deal's getting done at, I think, $38 a share, $38.50. Who is buying that thing at $43.56? I don't know, man. Nonetheless, you're at $35 right now. They leave a little bit of room for that deal not getting done. But again, the most remarkable part about this, okay? Frontier has 2.2 million fiber subscribers in 25 states, okay? Which will combine with Verizon's 7.4 million Fios connections in 9 states. Read that again. Frontier has 25 states. Verizon has only Fios connections in 9. Well, part of the reason why is because in 2016, okay, Verizon sold its TV and internet business in just 3 states to Frontier for $10.4 billion. 10.5, excuse me. Now, I was talking about yesterday that I wish I could have found some of the charts of what Frontier looked like, and I did find some of them just by Googling. And it is a tough one, man. And these are just generic articles going back. But yeah, in 2017, this stock just wouldn't stop going down. Frontier down 82%. We'll talk a little bit more about a heck of a deal probably in the long term for Verizon. Stay tuned, folks. We're coming back for the opening bell. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P just positive by 1 point. Pretty interesting, right? Been shopping around this level overnight. We did have a spike higher yesterday, but a pretty tight trading range, all things considered. When you think about the move that we've had in yields, you get the NASDAQ 100 negative by 55, only index currently in the red in the futures. Dow catches a bid up by 87, and you get the Russell up by 6. Jump over to Amazon. Yeah, quite a pop for Amazon right now. Up by 1.4% right now. Meta shares slightly in the positive. You jump over to Tesla shares. Up by 1.7% for Tesla. NVIDIA shares down by 0.9%. Intel shares down by about 0.25% right now. Apple catches a bit at the open, up by about 0.7. We jump over to Boeing. Boeing up by about 0.3% as we kick things off. A little retail. Walmart shares flat right now in the session. Target up by 0.5%. You kick things off to 153. And yeah, we were talking a lot. Dollar Tree trades lower yesterday. We're up by 94 pennies today. But boy, you were just trading at $85 on Tuesday. You're trading at $64 today for Dollar Tree. Those dollar stores are in trouble, man. Watch out for these dollar stores. Dollar General. Yeah, they're basically flat right now. Is that not open? What's going on? Yeah, it is. 81.20. There it is. Up by 0.25% for Dollar General. Up by 15 pennies. And then keep an eye on Affirm as well, as they were benefiting from people not being able to purchase unless they actually finance, buy now, pay later, etc., etc. But yes, Affirm flat this morning as well. Yeah, this was an interesting one from the Journal. Just looking at, Elon's been out there touting the reproduction rate, but it is interesting. The U.S. birth rate, right? Record low, 1.62 births per a woman in 2023. And what I will say, folks, is somebody with a small child in the house who's 3 years old, there's a lot of things, and I'm not sure it would spur baby making necessarily, but it is remarkable how much gets thrown around when it comes to taxes, when it comes to politics, when it comes to tax cuts, right? When it comes to stimulus, grants, all of this stuff that comes out of politics. The easiest way to stimulate the economy, folks, is to make sure that people who are having babies, people who are having kids, have the ability to take care of those children and provide them, especially at an early age. I'll give you a great example, okay, which makes no sense whatsoever. Tommy's 3 years old right now. Pre-K 3 exists, but you got to pay for it, okay? Pre-K 4 exists, but they have a voucher program. And then finally, when your child is 5 years old, you can send them to kindergarten, which is paid for as part of public schooling. Now, when they get to 4, there is some assistance voucher program that exists, and this varies all state by state, okay? But it is remarkable when you look at something like Pre-K 3. Okay, great example. There's schools around here. Pre-K 3, you want to send your kid to preschool as a 3-year-old, which you can. A lot of people do it. It's going to cost you like $1,000 a month at a lot of schools. $1,000 a month. Well, by the time they're 5, that's free. It's included. Meanwhile, when they're 3, that may be some of the most crucial areas of learning, etc., at that age, childhood, young age. And I could go on and on. We could spend a whole show. We could spend a whole year of shows probably on that. But yeah, whether you're talking about the tax credit, the child tax credit, et cetera, there's a lot that we could do to help some of the people because I see it myself, and it just makes no sense in terms of what's going on when I look at something like Pre-K 3, which is as simple as there's no reason why people shouldn't be able to send their kids to school as a 3-year-old when you think about the economic impact it has on people on the lower income socioeconomic threshold. You just need that to happen. What's happened? You're able to send your kid to school. You're able to go out and work and earn money at the same time. You're not forced to spend all that money on childcare. Yeah, it goes on and on. All right, what else have we got going on? We talked about Verizon. We talked about the jobs. We see non-farm payrolls tomorrow. Checking back in on rates right now, where we are. You're talking about a 10-year, 3.73, and a 2-year, just under that level. Is that it? That might be the end of the inverted yield curve, as we now have the 10-year up 9 ticks. You jump over to the 2-year, which is ZT, catching a bid as well, but not keeping up with where the 10-year is and the 2-year below where the 10-year is, and the cuts are coming in 13 days, and the market just can't figure out how quickly they're coming, right? That's where we are. The cuts are coming in 13 days, and the market just can't make up its mind how quickly they're coming, and they know they're coming, but how quickly are they coming? And we get a precursor to that tomorrow morning at 8:30 when we find out. And boy, if that jobs number's a miss, man, you better watch out. Because, yeah, the market thinks that we're going to have some misses here, folks, okay? The market thinks that we're going to have some misses, and the market thinks that the Fed is going to have to cut 50 basis points, whether it's this meeting, next meeting, December meeting, or all of them. Now, what's intriguing here is, right, where's our Fed Watch tool? On this one, I'll find it. I'll just pull it up again if I have to here. Because what's intriguing is you want to see how dramatic this market is really priced by December. There's a 13% chance right now that they have to go 50-50-50 is what the market is pricing in. Think about that. There's a 13% chance right now that by the time we hit December 18th, which is about 3 months away, that the overnight lending rate will be 1.5% below where it's at right now. Think about that, right? You combine the 4.25 to 3, you combine these two, as in the 3.75 to 4 range, plus you combine the 4 to 4.25 range, and that number is a greater than 50%. And what that means is there is a greater than 50% chance right now in terms of how the market is pricing things. Okay, now remember, that doesn't necessarily mean there's a greater than 50% chance. The market could just be wrong. But according to how the market is pricing things, the market's kind of never wrong, right? To a certain degree. What's the price of a stock? Well, the price of a stock is where it's trading at right now. Is it wrong? No, it's not wrong, because that's the price where it's at. Could it be wrong in the future? Yes, it could be wrong, depending on where we're trading at in the future, right? But a greater than 50% chance that we're going to have 5 to 6 cuts. Yeah. 4 cuts would be the 4.25 to 4.5 range. 5 25 basis point cuts would be the 4 to 4.25 range, and 6 gets us to 3.75 to 4. So pretty remarkable. You can talk about that they are looking for potentially 50-50-50, or maybe we go 25 and then they got to go 50-50 because the data is too much. Maybe they go 50 and then they go 25 and then they go back to 50 because they're not quite there yet. But nonetheless, that is a dramatic pricing of where we are. And yeah, I had pulled up one of those Frontier charts, and check this one out, because this one is the chart I was looking at, folks. And this is just a quick indication. And check out this one on the right here. That's what Frontier looked like. Okay, that was the chart. And it's just remarkable, man. They loaded up on debt. There's your 2015 spike. They buy Verizon's land operations in 3 states, California, Texas, and Florida. And that stock goes from $80 to 0. They go into BK in 2021. They come out in 2021, FYBR, and Verizon buys them back for about $10 million, plus all that debt as well. Stay tuned, folks. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We jump over to Snapchat. Interesting, right? Up by 1.6% right now. We're getting a little volatility. But I don't know. The headline was just coming out there. I saw that Snap is being sued by New Mexico attorneys general over sextortion of kids by predators. The one thing I'll say, folks, is listen, we talk about screen time, but social media, I'm going to keep Tommy off of social media forever. No, as long as you can. Yeah, whether it's Snapchat, Facebook, Instagram, TikTok, you call it what you want. Not healthy for young children. Okay, there's good screen time, there's bad screen time, and social media is probably the worst screen time of all. But Snapchat, nonetheless, trading a little bit higher on that news. You talk about numbers. We were talking about the NFL. The NFL is back tonight. Kickoff, 8:20 p.m. Eastern time. Baltimore Ravens heading to the world champion Kansas City Chiefs. But how about some of these valuations of these teams? Dallas Cowboys. I mean, pretty remarkable. They are leaps and bounds. You have one good run in the 90s, man, and they never stop you. That's pretty much the deal. Think about that, right? One good run in the 90s. And listen, they're America's team. They get it done. They get the fan base, right? Look at the revenue. $1.22 billion for the Cowboys, right? These numbers don't get made out of thin air, man. Look at the revenue numbers as they contribute to the value numbers, and look at how Dallas Cowboys, well above anything. Even the Patriots, come on. The Rams. Now you got L.A., right? What's the population of L.A.? I should know. What's the population of L.A.? 3.8 million. 3.8 million people in that city alone. Nonetheless, you go down the ranks. You start at 11 billion. Patriots out there at about $8 billion. Las Vegas Raiders at 7.8. The Jets, 7.35. The good old Eagles at $7 billion. Dub Bears, $6.4 billion, all the way down to the Cincinnati Bengals at $5.25 billion. Interesting, too. They talk about the debt as a percentage of the value. Some of these companies, and you can see if you were purchased, interesting how some of this debt goes. And I'm not sure how that plays in, but the Rams, 44%. Raiders, 18%. They just got a new stadium. Does that matter in there? Washington Commanders, right? They got purchased 17%. Maybe some of the teams that recently got sold, I don't know. You got the Falcons. Arthur Blank's been there for a while. 16% is debt versus the market cap of that company. So you look at something like debt as a percentage of value for the Rams at 44%. You're talking about almost $4 billion in debt there. Yeah, but they can handle it, right? I would say so. They can handle it. All right, we jump around to some other headlines we got this morning. We jump over to Ford. Ford truck hybrid models lead to 13% increase in August sales. We jump over to Ford as this market climbs higher with the S&Ps positive. Oh, there's some watch out for you. Look like the market. Always interesting when supply equals demand on the opening bell. Put it back to a 5-minute. Boy, you pop higher and then you give it up. Yeah, this is a pretty tight trading range. You're only talking about a move of about 20 pennies. But yeah, they give it up on the open. But nonetheless, the headline out there, vehicle sales jumped almost 14% last month, led by increases in the company's F-Series trucks and hybrid models. Pumping out some trucks, man. Yeah. Ford sales last month outpaced overall industry estimates of a roughly 6% year-over-year increase. So the industry was up 6%. Ford up about 13%. Okay. They reported sales Thursday of nearly 183,000 vehicles in August, including a 12% increase in trucks and a 50% jump in hybrid vehicles. Despite steep prices and high interest rates, U.S. auto sales have remained stable in 2024. Yeah, but they're not as high as some expected. Barclays on Thursday lowered its 2024 sales forecast to 16 million vehicles, from 16 million to 15.8, citing a 15.7 million sales pace through August. So they got to pick up the pace a little bit, I guess. Maybe you get into the holiday season. I don't know. I'm always intrigued at those Lexus, a holiday. What do they call them? A holiday to remember, where everybody's just going to buy their spouses $50,000, $60,000 cars without telling them. Not sure that's going to be the case, but nonetheless, Ford chopping around today. And you got Volvo. Cut margin and revenue aims after ditching the EV target. Yeah. So, trimmed its 2026 margin target, adjusted its revenue goals amid complexity in global trade and tariffs. The company earlier revealed that it would no longer target 100% EVs by 2030. Not surprising, as things have changed. The world is not adopting EVs as fast as we may have once thought. And, Volvo, they were early to the party in a good way. I wonder, when did they originally come out with that? Because I remember when they came out with that, and it was like, wow, they are doing it, man. They are going to get it done. They're going to be first to the party, and the share price benefited. But as the world has changed, we're not gotten there just yet. And yeah, they finally give up on that goal, and they're not going to get there. And to be fully EV in 5 years, right, with where we are right now, not going to happen. Yeah, probably not the best thing for your shareholders. All right, what else we got going on? Let's jump around and see how some equities are trading. Let's keep our eye on yields. S&Ps right now, a little bit of a pop, and then we give it back. We're up by 1 point right now, trading at 55.32. Look at the Dow rollover, right? We were in positive territory. You sell off on the open. Dow right now trading at 40,960. We take a look at a little bit of the heat map. We pull up the Dow. What's in positive territory? Amazon's catching a bid, man. If somebody knows what's going on with Amazon, what's going on with Amazon? They got a little bit of a run going on right now. Let's pull up Amazon. Up by 2.3%. What is going on? Yeah, Cantor Fitzgerald initiates coverage with an overweight rating and a price target of 230. Well, that's probably going to help. Yeah, Cantor Fitzgerald. Was that all it was? Maybe it is. Let's see. That's all I'm seeing in there. They won a motion to dismiss a Prime Video privacy suit, but 2.27% on a day we got the S&P flat. You got Amazon up by $4 right now. Apple shares up by a percentage as well. Check that out, right? Tech stocks catching a bid. Microsoft up 0.25% right now. Google shares up 1%. Man, what is going on? You look at this, as in we got tech stocks marking higher, and everything else is lower. Right? Look at this chart of the Dow. Amazon, Apple, Microsoft, even Intel. Even Intel's in the positive. Disney barely in the positive. Everything else in the red. You jump over to the S&P 500. Yeah, it's like the tech stocks are positive and everything else is red in this market. Man, look at this. I love these visual representations. Now, I'm generalizing, all right? You get the CME group positive by a percentage. Schwab is up by 0.8% right now. But boy, you really got to reach. JP Morgan barely up 0.1%. What do you got? You got Amazon up by 2.4. You got Tesla up by 3.8. Google up by 1%. Merck up by 2.2%. Comcast is up by 2.5% right now. Nvidia up by 1.5%. Everything else is in the red. And I'm generalizing, but you really got to start searching around to find some green, and that's the S&P 500. Boy, pretty remarkable. And there's a chart of the NASDAQ 100 right now. We're sitting right at about 19,000. Stay tuned, folks. When we come back, we'll talk a little bit of gold. Gold up by $20, trading at $25.44 right now. One more segment. Don't go away, folks. Be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 7 points right now. NASDAQ 100 up by 67. As I mentioned, right, it is most of those tech companies charging higher with everything else in the red, man. Apple up by 1.5% right now. You got Amazon up by 2.5%. Nvidia up by 1.8%. Google shares up by more than 1%. A lot of red in this market beyond those tech companies. That's the way it's been for some time. So we get 99,000 jobs added in August. We get non-farm payrolls out tomorrow at 8:30. It's going to be an important one. We'll see where we go. Wage growth was flat for both job changers and job stayers. Now, wage data are going to be important tomorrow as well. We'll see where that goes, but the jobs number is going to be important as well. Inflation no longer center stage as these jobs numbers are weakening. Wage data is still going to be important tomorrow, but where's that jobs number going to show? Market looking for about 165,000 jobs. ADP comes in at 99,000. And we'll see where we go. As I mentioned, always intriguing with the number of cuts this market is pricing in. And check out yields. It is not stopping, man. This market is freaked out, for lack of a better term, that this market is going to get some signals that the Fed needs to cut at a much faster pace than they have indicated that they are willing to. We got the 10-year yield right now sitting at 3.72%. We were almost at 5 not that long ago, folks. 3.72 is our 10-year. You take a look at this thing on a daily, it is a one-way rocket ship from 107 to 115 over the period of about 4 months. Pretty remarkable. The 2-year sitting at 3.71. The 10-year, 3.72. And I'm ballparking a little bit, but that 10-year above, disinverted, is the yield curve. S&P is up by 8 right now, trading at 55.38. And, the day is young, as our man Basil Chapman says. Basil's coming up next, folks. Don't forget, check out Basil coming up with the Tiger Technicians Hour. You can check out his opening call. Everything we do, folks, 30-day money-back guarantee for new subscribers. And, we check in on the VIX because we got some volatility coming down the line, man. The VIX sitting above 20 at 20.35 right now. And that gold contract, as I mentioned, gold sitting up $20 at 25.45. And we got a little weakness this morning with the dollar pushing 101. Stay tuned, folks. Basil's up next. Non-farm payrolls tomorrow. Have a great day. We'll see you tomorrow morning. Stay tuned for Basil, folks.